you make more money going up or coming down on these options?
Typically, it's down. The reason that is, Nate, is because a call option only makes money to the upside, but a put option makes money when it goes sideways or down.
Okay, I still don't know what I'm doing, but I still made $1,300 on 10 contracts. I still don't know what the hell I'm doing.
There you go.
Anyway.
Well, here's what you're doing that's making you money is the fact that you're buying when they're going up for calls, and then you're buying puts if they go down to the downside. And since you know how the market works, since you've made millions of dollars in this room, you know when you should buy and what you should get.
Yeah.
So it's the same principle, except there's deltas, thetas, right? Which gamma, which means the faster the candle moves, the more the premium moves. You've got theta, which is your time decay. The longer you hold it to expiration date, they start to lose money, right? So all of the Greeks start to kick in for you. So right now, Nate, if you were to buy 100 Qs, right? 100 Qs would cost you $40,000. Okay. So you have $40,000 of power moving on every one contract. Okay.
Okay.
So let me do this. Let's go both, single. Yup. Right here. So if you look at this on my screen, Nate. So right here for $50. So for $50, you had the power of $40,000.
Okay.
Okay. So if the Qs move up at all, it costed you $50 to get $40,000 worth. Now, everybody, the delta is actually how many you have, because remember, that's a percentage of. So if I'm looking at this 407 strike, and I'm trying not to confuse you, Nate. So if this just block this out, it starts.
Right. Okay.
Yep. The delta on this one, everybody, is 34 cents. 34 cents means actually you own 34 shares out of the 100. Think of it that way. It's a percentage, right?
Okay.
So realistically, it's like you owned 35 shares instead of 100 of Q. Okay.
Okay.
So when this moves, it's like you are moving 35 shares at a time, and it costed you $56.
And I had 10 contracts.
That's correct. So you were talking about times that by 10, right? And that is a lot of money. So 34 shares is 13,000 times 10. You were working with $138,000 when you had 10 contracts. That is why it makes so much money. Makes sense?